Bitcoin's confusing chop explained. Why this specific range and what comes next. Hey guys, it's Keith Allen. Bear with me just a moment. Seems my streaming software is not getting it to all my channels. So let me just welcome in some other channels and we will get into the analysis here in just a second. If you're watching on YouTube, do me a favor while you're waiting. Go ahead and smash some buttons, hit the like, hit the share, invite some folks into the stream so we can grow this channel. I really appreciate that support, and we will get started here in just a couple, really a minute, and we get some people joining us here on these other channels real quick. Lots happening here today and throughout this week, as we are in deep bear market conditions for sure. And I think that we're going to do our best to give you some clarity on what's happening, because this price action, this bear market is as nasty as they come, right? We've got a lot of confusion here, and that's what bear markets do, right? So let me just get this here real quick over here, and we will post it over here, and we'll be back in business here in a couple seconds. Okay, there we go. Not sure what's going on with the streaming software today, guys. I had this issue last week and need to get this worked out because everything seems to be set up fine on my side, but for some reason it's not streaming to all the channels that we request. So let's go ahead and start fresh and refresh. If you're new to the stream, welcome, my friends, to the show that never ends. This one seemed like it was never going to begin. My name's Keith Allen. I am a full-time trader. I'm a work-from-home dad, and I am co-founder of Material Indicators. Today, our topic, one that is near and dear to all of us, love it or hate it, Bitcoin's confusing chop explained. Why this specific range and what comes next? Well, Bitcoin bear markets are designed to test traders, and this one is certainly doing that. They sow doubt in your analysis, they shake your conviction, they punish poor risk management. Some days feel exactly like a bear market you would expect a bear market to feel, and other days make you question whether the last dip was the bottom or at least a local bottom that we should get a rally from, right? And to date, well, we're hit or miss on whether those rallies actually materialize or not. A lot of them really have not, especially most recently since losing the yearly open. We just haven't really seen the retest of resistance that we have expected. And so, one of the most confusing phases in any bear market is the consolidation phase. You don't know if it's accumulation, if it's distribution, until you get us a better sense of what the order flow is like over a period of time. And now that Bitcoin spent weeks chopping inside a significantly important range, bulls are frustrated, bears are frustrated, and undisciplined traders are getting beat up. So, yes, there's great opportunities to DCA for position traders in these consolidation ranges, but it is not yet clear to everybody whether we put in a local bottom, whether we put in a macro bottom, or if this is just another one of those phases that are going to shake us out, cause people to overtrade, misread signals, get chopped up. If that's happening to you, this live stream is for you because we're going to talk about all that stuff. And by the way, live chat is open. So would love to have you join me. These are always better when you guys participate. You get more info that you want, and it's much more fun for me. So I would appreciate anybody who wants to chime in and share some insight, ask some questions. I'll do my best to answer them. If you've got insights to share, by all means, please share them. Again, if you're new to the stream and you haven't done so yet, do me a favor, smash those frickin' buttons, hit the like, hit the share, and hit the subscribe so you never miss a future stream. With that in mind, we are going to dive right into this thing, and let me share a screen with you. And we'll start here on the candle charts. We'll move into fire charts and see what the order book and order flow data is looking like, or are looking like, I should say, and try and put it all together with some context. So let's start right here on the candle chart. This white line here is our local kind of low time frame trend here. This is a 4-hour chart, something you don't normally see me do. I'm frequently sharing daily, weekly, monthly charts. This is a 4-hour chart. This is our local trend, really, and you can see that Bitcoin trying to stage a breakout since last Thursday, the 12th, and trying to break out from this range. And now it looks like Bitcoin wants to go back and test support in this, on this trend line, which would make sense, right? You kind of want that in a healthy breakout, whether it's at the micro level, local level, or at the macro level. And so I anticipate that happening. Doesn't necessarily have to happen this week, and I have reasons to believe that it might not. But in terms of the range, I'm really interested in this range. I like where these timescape levels have confluence with the trend line. So if it were to happen quickly, this would make a lot of sense. But if it takes a little time to develop, I think this is very interesting because what you may not realize here is we have confluence not just between the trend line and these Q2 2021 timescape levels, but if we go over to the weekly chart, we also have confluence with the 200-week moving average. That makes it a very interesting target to me. Adds even perhaps more interest to this range. I think a lot of people are anticipating a support test at this 200-week moving average. We didn't quite hit it a couple of weeks ago when we went down to the 60K range. Yes, this is a target that probably all the algos are looking at as well. And so I would expect a little bit of an overshoot, maybe a wick through it to trigger some stop losses and some liquidations, and on some late longs, and then we'll see what happens from there, right? So this is a very interesting target, and if this support test does not hold, then you really don't have much friction until we get much lower here, right? Now we're talking sub 50K range, and that is also a very legitimate target as well. So I like where we have these concentrations of timescape levels. That does strengthen support, just as this strengthens support here. All this confluence between the timescape levels, the trend line, the 200-week moving average, all of this adds strength to this area. Doesn't mean price can't break through, but it does mean that it should, keyword should, provide room for or not room, but a setup for at least a relief rally. That said, how many of those relief rallies have not materialized so far, right? We didn't get our rallies back into the yearly open. And so that's something that we definitely want to see here, right? And look what's happening. We never even got the test of the 50-week moving average that we were looking for, right? That fell short at 98K when the 50-week was up at the 101.5K range. Now the 50-week is down to 99.5K and continues to erode, right? And you can see the the green 21 week moving average on a trajectory for a death cross with the blue 100-week moving average, and that has me where to a point where I want to share some things with you that really might bring some of this together more for you. So I've kind of extrapolated these moving averages out. This does not mean that these will stay in this trajectory, but this is the trajectory that we're on right now in terms of trying to forecast when this could potentially happen. No, that's where they were a couple weeks ago. So you can see it's changed a little bit. Um, we'll take that out. We'll take this out. Oop, yeah, we could take this out, and we could take. Yep, don't get too much going on. Let's clean this up a little bit. Didn't take. Oop, took out the wrong one. Didn't take out the old stuff. So let's clear that out. Let's clear that out. And now I want to show you some serious similarities between what we're seeing now and what we have seen historically. So maybe we can gain some insight as to how this is going to develop. As you can see, well, first of all, why are we hanging out in this area around the 2021 top? 69K. That was the number. That was the number that I had called when we formed this huge cup and handle. That was the number that we consolidated. That was the 2021 top. That was a number that we consolidated around for 8 months as we approached the 2024 presidential election in the US. And this ended up proving to be a very, very strong resistance level that was broken on the Trump pump, election day Trump pump. Boom, off we went. Okay. And so now that has been completely retraced, a bit symbolic and probably embarrassing for El Presidente. But it is what it is, right? So the reason that we're here and the reason that this range is so sticky is because we have so much structural confluence in this area, right? This, as I said on the way up through all of this, hey, we need these consolidation ranges to give us something structural for price to rest on or bounce from on the way back down. There will always be a support test. Whether it comes sooner or later, it will eventually materialize. And of course, it took a long time for this to materialize. And here we are now consolidating back in this range. Now, this has a lot of similarities to what we saw back in 2022. Okay, we had the 2021 top was here. And I want you to see some similarities here. Notice we had a death cross between the 21 and the 50-week moving averages, which we also have here. Boom. And boom. And then we have additional things that are worth noting, like a consolidation period. We had a good 4 or 5 weeks of consolidation here. We're now starting to consolidate here similarly. And we also have a imminent death cross happening just as we had back in 2022 in this breakdown. Doesn't mean it has to develop exactly the same way. Doesn't mean we're going to stay mirrored throughout the cycle. However, if we do, and so far we are, then this would be a point where this will trigger. These death crosses seem to trigger algos, and even though it's a lagging indicator, that momentum tends to continue, and this could take us to the next leg down. And I'm hearing a lot of talk about whether or not this cycle or this bear market is accelerated. It might be. You never know when the catalyst is coming that flips the trend. But so far it hasn't materialized. So this would be on par with keeping in a range, consolidating for several months, and putting us towards a finding a bottom sometime Q3, Q4 of this year potentially, and then starting to grind out. I do not see any scenario without some sort of miraculous catalyst that gets us to an all-time high in 2026. I see a scenario where we find a bottom in 2026, but I don't see a scenario where we are making a new all-time high in 2026. Of course, the market thrives on unforeseen scenarios. So just because we can't see it doesn't mean it doesn't happen. Like we could speculate on all the things that could trigger a black swan, but guess what? It's never the thing you expect at the time you expect. So who knows, right? What could obviously we've got geopolitical tension and enough hotspots in the world, including here in the U.S., that could cause it. We have um, enough economic issues anywhere in the world that could cause it. We have counterparty risk concerns that can cause it. And likewise, in terms of a recovery back to the bull market and flipping the trend, I mean, the Clarity Act is something that looms overhead, that everybody is talking about. But guess what? It's number one, it's delayed. Number two, it's compromised. Whatever they come up with, right? So yes, it's a positive in terms of a defined, clear, definitive regulatory environment that is going to make things more attractive for um, long time legacy institutional money, banks, et cetera, right? All coming in. And I think that a lot of this decline that we're seeing in price right now, a lot of this erosion is because banks are anticipating that coming in and they want to load up on cheap Bitcoin. And so, even in phases like now where we're seeing some accumulation happening, um, it is those institutional investors, they're basically dollar cost averaging. They're not so worried about buying the absolute bottoms. They are just dollar cost averaging their way down. Consolidation ranges, and especially important ones like this, make sense to dollar cost average. But I would argue that so would 58, so would the mid 40s, so would any of the so would any of the prior consolidation ranges, right? We were in the low 50s for a while. We were in the low to mid 40s for a while. And of course, everything started out in this kind of 25 to 30K range. That's a long, deep move from where we are now. Um, but it's not one that we can take off the table. Why? Because Bitcoin has a history of these deep corrections. Okay, don't be fooled by the green. Uh, this would be ugly, no question about it. But look where this would put us if we were to have a similar move. And I'm not saying that this has to happen, not even saying that it's a high probability move. But if this were to happen from the current all-time high, um, it it would put us in a situation where look where we're at. Look where price goes. That's to the 28K range. That's an area of prior consolidation, structural support, if you will. That is very, very interesting to me. I think I've heard arguments of going all the way down to 15K, 10K, 8K because of the Michael Saylor strategy, et cetera, et cetera. I would I would say at the moment those feel like um, very low probabilities uh, without the unimaginable black swan getting us there. And if they happen, then those tend to recover uh, relatively quickly, right? Like, look at this. This was the COVID crash. Boom, V-shaped recovery. Um, I don't think that as things are developing now that it will necessarily be a V-shaped recovery. I think it could be something more like we saw after the FTX crash, which was consolidate, break out, consolidate, break out, and then consolidate. This was a longer consolidation, and then we really made a move out. So that's why I don't rule this out as a possibility. But I think more likely scenarios uh, could have us in the, I don't know, mid 40s, low 50s range. And some of this has to do with the timing, right? If it happens fast, I would say that if we get to those ranges quickly, then I would say that there's a good chance that we grind down lower until we kind of hit that, I don't know, Q3, Q4 period to recover. So that's highly speculative at this point. So all we can do is look at these ranges here and watch the technicals, right? As long as Bitcoin fails to break above any of these levels, whether as long as it fails to, decisively break back above this yearly open, I mean this 2021 top, then there's no strength. Likewise, we could say the yearly open really is the pivotal point on the chart because this is what gets us back to real price appreciation and price discovery is getting back above these levels. The yearly open was at 87.5K, right? Let's see. Here we go. Yeah, 87.5. So this would get us above a lot of, technical resistance here with the key moving averages. And then of course we'd have that, that final one, the 200-day moving average, which is now down at nearly 100K being pretty psychological. So there's a lot would need to happen to get back above these levels. On the weekly time frame, if we look at these levels as well, the 50-week moving average, one we've all been looking at, just below that psychological 100K level. So yeah, real important. This is where all of the discussion of bull market recovery comes from, is quite frankly up above these levels, and most specifically, for me anyways, the yearly open at 87.5K, which, as you can see this little dashed line here, that's our confluence with the 100-week moving average that we had just drawn here, boom, a little bit ago. So that's very interesting to me. Takes a lot for us to get there. Now, in terms of this potentially speeding up or accelerating, as some have mentioned, there is something that is worth pointing out, and something else that actually has some, how should I say, relevance to what we had seen historically, and that is the weekly RSI. Now, if you remember when we first got into this bear market, I told you got to watch this level around 41 on the weekly RSI. Historically, anytime price is trending below that, we're in a bear market situation, and when we're trending above that, we're in a bull market situation. So you can see we're clearly in that range below that weekly RSI, and furthermore, there have been very few times, really so far, once per cycle, where Bitcoin has trended below this, in this oversold territory, below 30 on the weekly RSI. It happened back in 2015, where it found a bottom. In 2018, it also, right, there was a period of consolidation, but it did lead us to a bottom at the 200-week moving average. However, in 2022, when it occurred, it didn't actually find the bottom. We were searching. We had some consolidation, and I want you to see, notice what's happening here. This went on for a few weeks, several weeks actually, from what, about early June to early July. So it was for a month, basically, right? So this could be kind of the consolidation that we're seeing right now, could be similar to this. And this one found its way into a bit of a relief rally before a resistance test, and then breaking down again to finally finding the bottom in November. This was, of course, after the FTX crash. Had we not had the FTX crash, I have to wonder if this would have been the actual bottom here, and we would have just consolidated longer and then boom, out. So this, to me, was a bit of an anomaly at the time. I'm not expecting the same mirroring of another black swan counterparty risk type of event here, but that would just be all too weird if it did. Stranger things have happened in this market, right? So we're here right now. I mean, it is almost identical. And so if you factor in that we are searching, we're oversold on the weekly time frame. We're searching for support. We have an imminent death cross developing. And so if we could conceivably get this, get some sort of relief rally going prior to this happening, then we could really see this, this death cross leading us to the next leg down. And again, nothing says this has to happen the same way, but we would be foolish to ignore this, right? Hey Alex, did I see the BTC gold chart? I have not looked at the Bitcoin gold chart. We can maybe look at that in a little bit, but I have not really analyzed that chart at all, but happy to go through that for you. If you have any insights on it, by all means share them with us, Alex. Um, so uh before I go down that rabbit hole, let me show you one reason why I think that we might not get that run down to the 200-week moving average this week, which, if you remember, had confluence with the trend line and with the timescape levels down here when I had that stuff up. So let me just give you the refresher on that. So we have this confluence here. I do think that is a likely high, at least a high probability that we get there at some point. The reason I don't think it's necessarily going to happen this week, and this could be invalidated, okay? And I'm showing you this because I'm transparent. I'm a man of my word, all right? So trend precognition has given us a signal here on the weekly time frame. And I'll be honest with you, this signal has really fluctuated since it first appeared. Now, these signals are not, they're tentative until the candle close, but we can often trade them early because we know which ones are strongest. And when they first appear right at the candle open, those tend to be the best signals. And well, those tend to be very good signals. And the even better signals are the ones that have confluence when the A2 plus algo up here, that's the trend precognition A2 plus algo, you can see that up here, have confluence with the A1 algo down here. And as you can see, we have a signal down here. We have a confluence signal here. That gives this signal a higher probability, more strength, in my opinion. And that comes from experience. So now, that said, this has happened since this opened. This opened at a probability score of like 31. Since then, it has gone as high as I think the low 40s, low to mid 40s, and as low as I think 28. I saw maybe yesterday. So this could invalidate. It most certainly could. And we have things happening in the order book here, which let me drag fire charts onto the scene. We have things happening in the order book that are, how should I say, not so organic. I won't go as far as to call them manipulation, but I probably could. Look at this. There's just blatant price suppression going on. This came down from here, and then later this appeared up here. There's blatant price suppression going on here. And so they're compressing price into this range, trying to force a support test. And you can see recently some bid liquidity has moved out of this range here. Not a lot, but a couple million worth. And so these liquidity dynamics have been just like really constantly shifting here over the past few days. And this triggers volatility. Now we're in a tight range here, right? So volatility is only going to go so deep. But back to what I was trying to say about this signal, if for this signal to remain valid, This doesn't necessarily mean that price is going to soar. Um, Technically, what it means is price is not likely to go. There's a low probability that price will go lower than last week's low, which was just above 65K. So obviously, a dip to 65K would invalidate this signal, and we're getting dangerously close to that. So watching that closely, would love to see um, price grind back above here, maybe rally into this death cross before a further breakdown. That's just my take on things. You may have a different one, and if you do, I'd love to hear it. Um, and I would welcome you to come join us in the trading community on Telegram. We have a free trading community. You can find a link to it on the X page. You can find a link to it on the Material Indicators X page, on the Material Indicators website, on the YouTube channel, on the Coin Market Cap channel. You can find it everywhere. If you really want to find it, trust me, you can find it, or you can DM me and I'll send it to you. But yeah, that's a place we're discussing this stuff all day, every day. So Alex has asked about BTC Gold. Hey, I do these live, so what the heck? Let's just take a look at it live. And while we're doing that, let's just take a look at what's going on here with ETH. Weak doji candle going on here, but also having a signal on the daily chart from trend precognition, confluent signal, I should say, but also in a situation where it looks like it wants a support test down at the trend line to validate this breakout attempt, or invalidate it, I should say. And let's see if we have the same kind of confluence with the 200-week moving average. No, we don't. It's way up here as resistance up at the 2400 range. So this really gets us down to, let's see, confluence with this timescape level, which is 2023. Doesn't matter when it's from, really, with the exception of the current year. I think the current yearly timescape levels are the most important. Way up here as resistance, as you can see, around. We have some key resistance up here that really going to make that hard to break. Also psychologically around 3K. So there's that. Back to what did we say we're going to look at? Gold. Let's go to gold. What's the, are we talking futures, Alex, or I guess it doesn't matter. You're looking at BTC versus gold. What's that? XAU, something like that, right? Okay. Well, does this turn into a V-shaped recovery, in your opinion? And as you can see, I have no geometry on this chart whatsoever. I've not looked at it. Let's see if we get any timescape levels up here that look interesting. So look at this. If you looked at this on with this perspective, then you have some tough resistance back here at 14 and a quarter, and not a lot of friction to get down lower here. Let's see if there's anything different on the weekly time frame in terms of support. There's not. So I'd be watching this very, very closely. If you're trading this, I'd be watching this very, very closely. But look at this death cross here between the 21 week and the 200 week. I think you got further breakdown coming here, my friends, for sure. I say for sure. That's my take on it. So that's speculative. That's a speculative for sure. So maybe not so much for sure. That wasn't a great term to use in this game, but clearly a breakdown. If you just did it with structural TA, and I'll just do this down and dirty, you can see the breakdown already occurred, right? And now you have death crossing moving averages, all of them. The 21 came through the red 50, the blue 100, and now the purple 200. That is a validator of a bear market on this coin pair. Oh, well, not a coin pair, but on this pairing, um, because gold's not a coin. Uh, and then you had a further validation with 50 and 100 death cross, and this looks like it's setting up um, for a pretty interesting potential short, in my opinion. So there's that opportunity, and gold has been soaring, so it's due for a correction, right? Is that a safe assumption? Hope that resonates with you, Alex. Alex saying maybe some support in the 12.8 or 8.9 range. So what's that look like? Um, I see it here just based on timescapes in the 11.5 range potentially. Um, let's see. Yep. And below that, you have a nice cluster here in the 10.5 range. And 8.9 was also on Alex's radar. Yeah, you've got prior low right around this level here, right? And also a timescape right here at the beginning of this run. So certainly those are all valid levels. And quite frankly, you lose this, you don't have a lot holding you up above 8. Um, I mean, this cluster down here in the 5 range looks very, very strong. Not saying we're going there. That's a bold move. I don't know. Let's see what that looks like in terms of a measured correction. I mean, you're already down 70% from the all-time high on this pair here. And to go further, 78%, that's consistent with prior bull markets, for sure. So, yeah, your target around, um, in that 9 to 11 range looks interesting to me, for sure. So, it will be telling whether or not, price can recover this, but I think with the especially with these weekly death crosses and a brand new one happening right before your eyes, like this just happened on Sunday. Or Monday, I should say. This is very, very interesting to me. Um, Hope that gives you the insight you're looking for. And thanks for sharing that with me. I literally have not looked at this chart because I don't trade it. But I'm happy to look at what you guys trade because that's what I'm here for. I hope this has been enlightening for you guys. I'm bummed that we didn't get more engagement on this because I seem to be having an issue with the streaming software to get me back to those live social channels. So hopefully I can get that addressed here soon. But nonetheless, really appreciate the follows and support. If you're new to the stream, or even if you're an OG, do me a favor, hit those buttons. If you're watching this on the playback, drop a comment, and I promise to engage with you on the pre-recorded version, and I will engage with you whether you're watching on YouTube or on X or wherever you watch. All right, guys, thanks again. Links in the description down below. Did I show you the fire charge deal? I did. That also, if you're interested in any of these tools, you can find them at materialindicators.com. Come on, let's enough with the shenanigans here, whale guys. Maybe just a little bit of relief rally would be nice. Because let's be honest, we know that we all want to short that relief rally because the bottom ain't in. Have a great day, guys. We'll be back with more. If I see things developing through the course of the week, I'll do my best to chime in. Of course, make sure you're joining us in that Telegram community so you can engage with us and talk shop 24/7, 365. That's what we do. Have a great day, guys. Here's to trading smarter.